Stock Daily Insights. Your daily market compass.
Key points covered in today's update. 1. Long-term investors should ignore market noise. 2. Tesla's production and operational updates. 3. In the economic downturn of China, is Tesla's future full of uncertainties? For those interested in these areas, don't miss today's important content. Okay, let's go. Part 1. Long-term investors should ignore market noise. Long-term investors should steer clear of market noise. As Tesla's market value continues to climb, the volatility of its stock price has caused considerable anxiety among many investors. Tesla's current market value stands at $826.7 billion, placing it 10th among the world's top 10 companies by market capitalization. Despite this, the short-term fluctuations in Tesla's stock often make investors uneasy. According to statistics, Tesla's average daily trading volume over the past 12 months has reached 105 million shares, with an average holding period per share of only 23 days. In comparison, Nvidia's average holding period is 52 days, more than double that of Tesla. This highlights the different strategies investors use in stock trading. Data shows that Tesla's daily returns mostly fall within the range of -2% to +2%. This level of volatility is within an acceptable range on 81% of trading days, but fluctuations beyond this range or more frequent ups and downs often lead to increased anxiety among Tesla investors. This is a common emotional reaction among investors. Some feel uneasy during short-term price drops, thinking they should cut losses to minimize damage. Others, when seeing a rapid short-term rise, choose to exit temporarily, hoping to re-enter after a pullback. However, experts point out that such emotional decisions can lead to buying high and selling low, ultimately causing greater financial loss. In reality, most of Tesla's gains occur over a short period, meaning missing key moments can significantly impact long-term investment returns. Tesla investors should understand that short-term price fluctuations are mostly noise and do not reflect the company's fundamentals or long-term potential. For instance, Tesla has faced several unmet expectations, often referred to as painting cakes in Chinese, over the past few years, but these challenges haven't altered the company's ongoing trend of innovation. Taking a broader view reveals that despite frequent fluctuations in Tesla's stock price, long-term returns remain impressive. According to a long-term statistical analysis spanning over 14 years, Tesla's stock has an average annual return rate of 41%. This demonstrates the company's exceptional return potential for long-term holders. Therefore, seasoned experts suggest that investors should take a longer-term view of Tesla's stock and avoid focusing too much on daily price fluctuations. After all, successful companies like Tesla often face challenges brought about by major technological breakthroughs. These challenges might affect stock prices in the short term, but often present good investment opportunities in the long run. Tesla's success is not only based on its product innovation, but also on its long-term strategy, technological advancements, and market share growth. For those investors willing to remain patient, holding on to Tesla stock for the long term offers the chance to achieve returns that exceed the market average. As experts say, our biggest enemy is often ourselves, and the wisest choice can sometimes be doing nothing and patiently waiting for the market to recover. Long-term investors who believe in Tesla's future potential can maintain confidence and not let short-term fluctuations change their original intent. This analysis is provided for reference only and does not constitute investment advice. Part 2. Tesla production and operational updates. There are some rumors regarding Tesla's production and operations in China. Some Tesla owners in China have reportedly encountered difficulties in the delivery of their new vehicles. However, the cause is not related to production or logistics issues, but rather due to a delay in the issuance of the Certificate of Conformity by the Chinese government. The reports suggest that due to a technical problem on the government's side, the certificate issuance system is temporarily down, leading to delays in some vehicle deliveries. For other automakers with larger inventories, this delay may not have a significant impact. However, it is particularly noticeable for Tesla, as the company operates on a shorter inventory cycle. Other brands, which have longer inventory cycles, have already secured these certificates in advance, so their deliveries remain unaffected. This information has not yet been confirmed by Tesla, making it difficult to accurately assess the scope of the impact. However, it is speculated that thousands of vehicles might be affected, with some deliveries scheduled for this week potentially being delayed until next month. Given that China's National Day holiday is approaching, this delay could significantly impact Tesla's delivery figures. Again, this information is yet to be verified, so if anyone has accurate information, Feel free to share it in the comments section. Next, let's discuss the weight of the Cybertruck. As the global electric vehicle (EV) market rapidly grows, major automakers are introducing flagship electric models. However, as vehicle sizes and performance increase, many EVs are reaching new weight milestones. According to the latest data, here are the heaviest electric vehicles currently on the market, ranked by weight. 1. Hummer EV, 9,063 lbs. Tow, Chevrolet Silverado EV or ST, 8,953 lbs. 3. GMC Sierra EV, 8,900 lbs. 4. Cadillac Escalade IQ, 8,800 lbs. 5. Rivian or 1T, 7,148 lbs. It's worth noting that the top 4 models all come from General Motors, GM, brands, and these 4 vehicles have a combined battery capacity of up to 800 kilowatt-hours, equivalent to the battery capacity of a Tesla Semi. While these large EVs offer impressive range and power, their massive batteries and vehicle weight present significant challenges. Meanwhile, Tesla has managed to keep its vehicle weight relatively under control. The heaviest version of the Cybertruck weighs 6,843 lbs, while the all-wheel drive, a WD, version weighs only 6,603 lbs. Compared to similar models from GM, the Cybertruck maintains a relatively lightweight advantage, which positively impacts the vehicle's range and energy efficiency. According to multiple market surveys, consumers prioritize factors like range when choosing an EV, but vehicle weight and energy efficiency are also crucial considerations. As governments increasingly demand energy efficiency and emissions reductions, automakers will need to find a better balance between performance and environmental impact. I'll bring you more updates as they become available. If you enjoyed this video, please like and subscribe. Your support means the world to me. Part 3. Tesla's future amid China's economic winter. Although in the short term, a series of heavy-handed policies have been introduced by the government, bringing China's economy from the ICU to the KTV almost overnight, some even joking that Japan took 30 years to recover while China only took 3 days. The situation is undoubtedly more complex. Unlike the inflation issues faced by other major global economies, China is currently experiencing its longest period of deflation since 1999. According to the latest GDP deflator data, China has seen 5 consecutive quarters of falling prices, a phenomenon not even observed during the 2008 financial crisis. As consumers anticipate further price drops, purchasing behavior is delayed, leading to a sustained contraction in domestic demand, ultimately stagnating the economy. According to data from the World Bank and the International Labour Organization, China's unemployment rate has been rising since 2020, reaching a new high in 2024. With the collapse of the Chinese real estate market and stagnation in the manufacturing and construction sectors, concerns about the Chinese economy have intensified. In response to this crisis, the Chinese government has launched a series of stimulus policies, including reducing bank reserve requirements, lowering mortgage rates, and injecting large-scale capital. While these measures might stabilize the market in the short term, the long-term risks remain unaddressed. The worsening economic situation in China could have multiple impacts on Tesla, which is highly dependent on the Chinese market. As one of the world's largest electric vehicle markets, China plays a significant role in Tesla's sales. With the increasing risk of economic recession in China, consumers may delay purchasing high-priced items such as electric vehicles. The deflation crisis in China could lead consumers to expect further price drops, resulting in delayed purchases, which could directly affect Tesla's sales in China. If domestic demand in China does not recover, Tesla may need to seek other markets to fill this sales gap. Another risk comes from the supply chain. Tesla relies on China as a key part of its global supply chain, particularly the Gigafactory in Shanghai. The stagnation in China's manufacturing and construction sectors could lead to rising production costs, which would impact Tesla's production efficiency. Furthermore, if financial market instability persists and investor confidence in Chinese manufacturing wanes, Tesla's supply chain management could face greater challenges. China's stimulus policies may stabilize market sentiment in the short term, and lowering interest rates and mortgage rates could boost consumer confidence in purchasing vehicles, which might benefit Tesla in the short run. However, if China overly relies on fiscal stimulus, it could trigger broader inflation, which would increase Tesla's production and operational costs, thereby affecting its global competitiveness. In light of China's unstable economic situation, Tesla may need to be more cautious in assessing how to address potential risks. What are your thoughts on today's news? Feel free to share your views in the comments section. That's all for today's content. Thank you for watching today's market update. For more insights and daily stock market analysis, don't forget to subscribe to our channel and turn on notifications. Share this video with others who might find it helpful, and leave your thoughts or questions in the comments below. See you in the next update.